What a historic day for Palantir's. Palantir is being called out as the most performing S&P 500 stock this year. However, despite this achievement, the price continues to decline. And people are scared. Some even say that the price will drop over 50%. But there's something you need to know first. Analysts are saying that this price crash is a game changer. And it will skyrocket the price to $589. But wait, how is this even possible? What is the basis of this? And what on earth am I even talking about? Well, let me explain. Disclaimer. Palantir is absolutely on fire right now. Analysts are buzzing about it being the top-performing stock in the S&P 500 this year. The S&P 500 itself has climbed a solid 25% year-to-date. But what's really exciting is how companies riding the artificial intelligence wave are dominating. And Palantir is leading the pack. This has been a wild comeback story for Palantir Technologies. After hitting rock bottom during the market sell-off in 2022, the stock turned things around in a big way. It nearly tripled in 2023, which was already impressive. But then 2024 happened. With skyrocketing demand for its AI software and faster revenue growth, the stock shot up a mind-blowing 370% so far this year. This is huge, not just for Palantir, but for the AI industry as a whole. It shows how much potential there is in this space. Investors are clearly betting big on AI being the future, and Palantir's incredible rise is proof of just how massive this trend has become. However, things aren't looking so pretty today. Palantir's stock has been dipping, and it's making people seriously panic. One Twitter user summed it up perfectly in a post. They said, "I remember when a 5% down day on Palantir was a buy-the-dip opportunity. This is no dip, unfortunately." The post came with a chart showing Palantir's stock sliding by almost $4 in a single day. That's not a small bump, it's a noticeable drop, and it's hitting investors hard. What they're saying is that this isn't just one of those quick, recoverable dips we've seen before. It feels more like the momentum has slowed down, and people are starting to question what's next for Palantir after such an incredible run. And the fear is very real. People are starting to believe that Palantir might have already hit its peak, and that the only way from here is down. One Twitter analyst captured this sentiment perfectly, saying, "I feel like the top is nearly here. It might run a little further, but I don't believe it'll continue to go upward for much longer." Why? Gut feeling and stretched multiples. They went on to add that overextended expectations or some kind of external shock could easily trigger a sharp drop, and even flawless execution by the company wouldn't be enough to save it. This hits close to home for Palantir right now. After such a jaw-dropping rally, the stock is facing a harsh reality check. The fear of it being overvalued, combined with a tough day in the market, is rattling confidence. Investors who once cheered every gain are now wondering if the hype has gone too far, and if the sell-off is just getting started. But here's the thing. This dip might not be as bad as it looks. One analyst actually sees it as something crucial, a necessary step for Palantir to set itself up for a jaw-dropping 100x growth and eventually hit $589 per share. Wild, right? However, he explained that before it gets there, the stock is almost guaranteed to get cut in half. He pointed out that every massively successful company has faced this kind of dramatic correction on its way up. He even asked the big question, will you have the courage to hold through that correction, or double down? Right now, Palantir's situation feels like it's teetering on the edge of this exact scenario. After such a meteoric rise, it's natural for a pullback to happen. The stock might be dipping, but for long-term believers, this could be a critical reset before the next big climb. On top of that, other analysts are chiming in too, backing this perspective. In a reply to the post, one analyst called it an excellent take and reminded everyone about Palantir's history. They noted that while we're unlikely to see another drop that dramatic, a significant correction isn't off the table, especially after the stock's insane returns of 360% and 167% over the past 2 years. The advice was clear. Unless something major shifts the investment story for Palantir, long-term investors should consider buying shares regularly, especially if there's a meaningful dip. Even though Palantir's valuation might seem a bit over the top right now, analysts are still confident in its future. They're saying it's one of the best companies in its class, with a real competitive advantage and an incredibly bright future ahead. The technology and the vision behind Palantir are just that strong. And when you think about it, that's what makes Palantir's rise to the top of the S&P 500 this year so much more understandable. Despite any short-term dips or corrections, The company's potential and leadership in the AI space are undeniable. Its impressive performance isn't just a fluke, it's the result of solid fundamentals, a unique position in the market, and massive demand for its AI-driven software. That's why it makes sense that Palantir has managed to outshine most of its peers, even in the face of concerns about its high valuation. This gives a whole new perspective on the price drop. In fact, many people are starting to see it as a golden opportunity to buy more. And it's not just your average retail investors jumping in. Huge players like ETFs are getting involved. For example, the Invesco DWA Technology ETF has just opened a fresh position in Palantir, snapping up almost 300,000 shares. That's a serious vote of confidence from some of the big names in the investment world. In fact, looking at the bigger picture, Palantir's institutional ownership is sitting at around 54.5%, and that's a pretty big deal. Why? One analyst pointed out that higher institutional ownership leads to more price stability. The reason is simple. As more institutional investors hold shares, the stock becomes less driven by the emotional ups and downs of retail traders. This means that over time, Palantir will likely trade more steadily, with less of the wild volatility we've seen in the past. Instead of being bounced around by quick buy and sell decisions from individual investors, the price action will be more influenced by long-term strategies and algorithm-driven trading. With its price dip right now, it's no surprise to see that emotion-driven moves might be less impactful in the long run. Instead, as institutional ownership grows, the stock's price will likely stabilize, making it less prone to the sharp swings we've witnessed recently. So, while the short term might feel shaky, the bigger picture suggests more calm and reasoned trading in the future. So with everything considered, it's clear that things are just getting started for Palantir. With the company's unique position in the market, it's set to dominate, no doubt about it. There's no maybe or what if here. This is the future, and Palantir is leading the way. CEO Alex Karp recently shared his vision in an interview, explaining why he believes Palantir's technology will be a total game changer in today's market. He explained that all the value in the market is going to shift toward chips and what he calls ontology, basically the software infrastructure that powers the next wave of innovation. The key point he made is that Palantir's software allows companies to do things that would have previously cost billions, but now they can do them for a fraction of the cost. Palantir is all about making complex data and AI accessible and affordable, letting organizations harness power that was once out of reach for many. This kind of technology is the foundation for everything moving forward, and Karp's vision shows why Palantir is in the perfect position to take full advantage of it. Palantir's current dip might just be a temporary blip in a much bigger journey. With its powerful technology, high institutional backing, and a future driven by AI and software infrastructure, it's clear that Palantir isn't just riding the wave. It's helping shape the future of how data and AI will transform industries worldwide. It's about revolutionizing how businesses operate and making advanced tools available on a massive scale. As Palantir continues to grow, its impact on the world will only deepen, creating opportunities and changing the game for communities, industries, and economies. This is just the beginning, and the future looks incredibly bright for Palantir. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.
Today is actually a huge day, and it's all because of tricks being done behind the scenes. New bombshell by Satoshi Kusama, hundreds of millions of US dollars gone missing, and much, much more to come. But what am I even talking about? Well, let me explain. Disclaimer. Today marked a highly anticipated moment for countless crypto enthusiasts. Yet, as the day unfolded, the excitement fizzled into disappointment as the crypto market took an unexpected turn, causing prices to plummet. For many, this sudden crash was not just a financial setback, but a frustrating reminder of the volatility inherent in the world of cryptocurrency. But what happened? Well, a couple of weeks back, the crypto world was buzzing with the news of Hong Kong giving the green light to a Bitcoin ETF. It was a big deal, with many hoping it would flood the market with fresh cash, much like what happened when the US approved its own Bitcoin ETF. For folks who usually stick to traditional investments, it was a big deal. But what happened? Well, a couple of weeks back, this was a chance to potentially rake in some serious gains. As they saw Bitcoin doing well, they started wondering about other cryptos. They discovered they could buy them on crypto exchanges. And when it came to choosing a crypto that's easy to understand for newcomers, Shiba Inu stood out. With its adorable dog logo and simple concept, it was a natural choice. Newcomers to the crypto scene don't want to dive into complicated projects they can't wrap their heads around. That's where Shiba Inu shines. It's straightforward and easy to grasp. Unlike some other cryptos that are filled with technical jargon, Shiba Inu's simplicity makes it a welcoming option for beginners. So it's no surprise that Shiba Inu's price skyrocketed in March. And now, with Hong Kong approving them, Bitcoin ETF, the Shiba Inu community, anticipates a similar surge in interest. But wait, if the Hong Kong Bitcoin ETF was approved a couple of weeks ago, then what does it have to do with today? Well, a couple of weeks back, the Bitcoin ETF got the green light, but today marks the beginning of its trading. You see, when an ETF gets approved, it's like getting the green signal to start trading it on the stock market. So even though it was approved earlier, today is when people can actually start buying and selling shares of the ETF. It's like the difference between getting permission to open a store and actually opening its doors for customers. Today is when the Bitcoin ETF officially opens its doors for trading, allowing investors to get in on the action. And this is where things went wrong. The Hong Kong ETF was expected to bring in a whopping $300 million in trading volume, but as it turned out, it only managed a mere $11 million. Crypto users are calling it one of the worst predictions of all time. As a result, frustration swept through the market, causing the price of Bitcoin to plummet. And since Bitcoin holds dominance over the entire crypto market, its downward trend often drags other cryptocurrencies, like Shiba Inu, along with it. Today, we're seeing Shiba Inu trading in the red due to this major dip in the crypto market. But anyway, this is just the first day. So even though the prediction failed, the impact is still to be seen. But one thing we know for sure is that you can expect the crypto market to be pretty volatile this week. With unexpected turns like these, it's hard to predict what might happen next. But amidst this uncertainty in the broader crypto market, Shiba Inu developers continue to surprise us. It's actually a good thing when Shiba Inu devs keep surprising us. This is important because it shows that the Shiba Inu market is still a good place to be, and it's a good thing that Shiba Inu team is actively working to improve the project and adapt to changes in the crypto landscape. It helps build trust among investors and users, showing that the project is dynamic and responsive to feedback. Ultimately, this can contribute to the long-term success and sustainability of Shiba Inu as a cryptocurrency. But what actually just happened? Well, the Shiba Inu community is still buzzing with excitement from yesterday's huge news about ShibaSwap being migrated to Shibarium, something we've been eagerly awaiting for almost a year. And today, Satoshi Kusama came through with more announcements and important details that we all should know. When the lead developer of a cryptocurrency project like Shiba Inu makes announcements or shares important details, it's crucial for people to pay close attention. Their words not only reflect the project's vision and direction, but also signal progress and growth. Additionally, these announcements foster community engagement and transparency while influencing market dynamics. Satoshi Kusama, the founder of Shiba Inu, said, "Transition ShibaSwap decentralized exchange as a central hub for innovators and Shibizans." In a recent post on XE, Lucy, Shiba Inu's content marketer, raised awareness of Kusama's reaction to the migration of the ShibaSwap platform to Shibarium. As we already know, ShibaSwap recently underwent a migration from solely operating on the Ethereum platform to the ecosystem's layer 2 blockchain Shibarium. Following this development, ShibaSwap is now multi-chain. Having ShibaSwap operate as a multi-chain platform is incredibly useful and important for lots of reasons. But overall, the transition to a multi-chain infrastructure positions ShibaSwap as a more versatile and resilient decentralized exchange, capable of meeting the evolving needs of its users and the broader crypto community. With all the new features that came with the move to Shibarium, Kusama pointed out how ShibaSwap has become a hub for both creators and members of the Shiba Inu community. He described it as a place where the Shiba Inu community can be a place where people can come together to share ideas and projects. Kusama also mentioned how ShibaSwap is a great place for new community tokens to grow. He thinks it's like a lively marketplace, where different projects and members of the Shiba Inu community can come together and thrive. Such updates and developments really attract more and more people to view Shiba Inu as a long-term investment. Andrew Kang, co-founder of Mechanism Capital, for instance, has suggested that meme coins like Shiba Inu may see a 100 times expensive expansion in their market cap. He believes this could happen because big investment firms, called venture capitalists, are starting to like coins like Shiba Inu. He said this in a recent post on X after learning about the crypto holdings of some of these big VC firms. According to the data from Arkham, a company that studies markets, one of the biggest VC firms, Paradigm, has a lot of money in crypto, but they don't have any Shiba Inu. However, another VC firm called Symbolic Capital Partners has quite a bit of Shiba Inu. They have about 65 billion Shiba Inu tokens, which are worth around $1.64 million. This is just a small part of their total crypto investments, which are worth over $80 million. Another investment firm called SCP Ventures also has Shiba Inu tokens worth $1.6 million, which is about 2% of their total crypto investments. When Kang looked at the data, he found that Shiba Inu tokens were worth $1.6 million, which is about 2% of their total crypto investments. When Kang looked at the data, he noticed something interesting. He saw that big investors are starting to like coins, like Shiba Inu. Kang thinks their interest could make meme coins grow a lot, maybe 10 to 100 times bigger. He imagines this happening bit by bit.